What's happening, everybody? To the exam breakdown, today is Wednesday, April 30th, 2025. Holy smokes. End of April, which means like May is like tomorrow. Isn't that crazy? And we're sort of making our rounds. And if y'all got family, kids, school, man, where summer vacation is like going to blare up and sneak up on us and punch us in the chin. Hope you got plans for your family over the summer. We are compiling stuff and we're looking forward to a bunch of stuff, but the kiddos are going to be home and it's going to be cool. But hopefully you're adjusting your schedules and making sure that you're planning for all of these things to make sure that those events are memorable. My name is D. Kumar. It is a pleasure to be with you on these breakdowns. What we do is we go through exam content and I try to just filter through, think about moving things out of the way, out of your way of stuff that you don't really need to worry about so that you can get licensed faster, quicker, more efficiently. It is my goal. Now, I've been doing this for a very long time. I'm pretty good at taking examinations, all kinds of different tests. I like to geek out on that kind of stuff, and I like to study the strategy, everything from the psychological aspects of understanding how to think through content to be able to generate possible questions and content and material, but it's also thinking strategy and helping people with that. I help people with all kinds of different things. I just was coaching someone through some medical board examinations. And so for me, it's about fun. It's about kind of helping through it. And then honestly, the business of real estate has brought me so much. It is my mission. I don't know why I feel this way. Don't ask me. I'm not sure. But the genuine truth is I like helping folks out. And I mean, one of the things that I see people getting stuck on all the time is getting through these examinations. So the goal of the channel, thank you very much for hanging out with us, checking it out, maybe subscribing to our channel. If you have, thank you so much. We're growing like crazy. But the mission is to help folks get through this quicker, faster, and more efficiently. And if you read the comments all over our channel, we couldn't be more thrilled. There is tons of success out there. Folks are passing their examinations. And for those that are still having a hard time, don't sweat it. We're here to help you. Now, sometimes, the video content on YouTube alone might not be able to help you. Maybe you're being distracted easily. Maybe there's not enough content. So I just want you to understand that some people are passing. For those that are looking at the positive comments going, man, what's wrong with me? Why am I not passing? I'm having a hard time. Don't feel that way. Please don't feel that way. I've been teaching people for so long. Everybody will get there if they really, truly want to. And it's going to take sometimes a little bit more time. For those of you that need a little bit more assistance, we have we have other materials and stuff. They're for sale. We have things like crash courses and we have all these other things. For my mortgage folks, hang in there. I have got a crash course that we are putting together right now. And this is the stuff. This is the truth. This is the stuff that you need to know. This is the stuff that's going to help you get through that examination. I just know the material so well. And I've been training this stuff forever that and tens of thousands of folks that I've trained in all of these different disciplines. And I just know this stuff well enough to be able to guide you through and filter out the stuff that you don't need to know. So be on the lookout for that. That's coming your way soon. All right. So today is mortgage origination help. And we are going over a couple of things pretty quickly, just a short exam breakdown today, just to get you sort of oriented with a couple of things. We're going to be talking about mortgage disclosures, and specifically, I'm just going to give you a quick overview, like 10,000, 30,000 feet in the air kind of thing, RESPA, TILA, and TRID, sort of how these three things work. And at the end of the thing, I'm just going to make sure that you guys are calibrated and everything, and you're off to the races. Now, for those of you guys that are having a little bit of trouble figuring stuff out, and it's not just the content on YouTube that's helping you. I just wanted to point out a couple of things. So like we have a store and we have a YouTube channel. Now, many of you guys are coming here because of the YouTube channel, and thank you very much. I'm just going to show you this really quickly. So here's our YouTube channel. And if you just go to videos and filter through popular and scroll down, number one, you'll see the NMLS flashcards. So we go through some very popular NMLS credit vocab phrases, credit history. I'm like reading this while I'm talking to you, but this is something that you're going to find, and it's really popular. It's helping a lot of people, believe it or not. And the video right after that is this other one here, the top 25 NMLS practice exam questions. And I want you to check out these two videos. Many of you already have, but if you haven't, I'm just kind of showing you around. And here we also have a store. If you just click on store and go down, one of the things that you can find that's helping a lot of students are these flashcards for the NMLS examination. So check these out. If you just click on the link, it's going to take you to our Shopify store connected to it, and you can check out these flashcards. They're short money for the value that we're delivering to you. They've got really solid things, and they're instant downloads. You basically download these, and you can print them out, cut them out, or just, you know what, have your kids cut them out, because, like, you know, they're going to need something to do if you're studying through the summer. Now, one of the challenges for this exam, and I'm fully aware of this, is that if you fail the mortgage exam, then there's a cooling off period. You have to wait 30 days for the first fail, second fail, 30 days for the second fail, third fail, 30 days for the third fail, after the third failed attempt, 6 months. So it is tough to sit there, and, you know, the idle mind is the devil's workshop, as they say. So it becomes more and more frustrating if you are unable to get through this exam. And so for those, this is a direct message to y'all, many times from what I've found when I have coached, you know, folks, executives, that's typically what I get pulled in to do. It's the overwhelm of the content and the confusion as to what to study versus what not to study. And then it's just gaming the engine to make sure that you can get to the passing mark, which is 75%. And so it's a challenge. So I'm with you. And if you're in that spiral, and if you're waiting for your 30 days and you're focusing and trying to study, my suggestion is, if it's not working by the second time, then you need to seek a little bit more professional advice. It's like, well, what do I do? What am I doing wrong? And you need a technician to kind of go in there under the hood. It doesn't mean that you don't know what you know. You know your theory probably, and you took a course, and the courses probably was decent, and you learned some stuff. Now it's being able to filter through stuff, because you took a 20-hour class, is like drinking through a fire hose. All of this stuff and all of this material. So flashcards, for example, are something that could help you sort of assemble the key words, and this is put together by folks like us. You're kind of rest assured that the words and the vocab that we're pulling in there are essential vocab phrases, right? So we're trying to filter through and help, like, organize your strategy as to what you should study. So remember, check things out like the vocab, and that's probably going to serve you well. All right. And I just wanted to show you those 2 videos because they're doing right by a lot of folks, and because they're helping a lot of people, and we're hearing good results, I wanted to hip you onto it. Many times folks don't know that we have them. All right, let's get into this really quickly. Understanding mortgage disclosures, an overview. Let us do this. I'm going to put my little face down here in the corner, and I'm going to get my pen ready. Let's do it. Let's get red, and let's pick this. All right, cool. All right, so let's go. Here we go. So the NMLS examination definitely wants you to know somewhat about the Real Estate Settlement Procedures Act and the Truth in Lending Act. So number one, RESPA, you should know, is Reg X, or implemented by Regulation X, and then TILA is implemented by Regulation Z. All right, so the 2 of these laws are consumer protection laws, right? They're consumer protection laws. And the idea here is that both, being consumer protection law, require a certain amount of disclosure paperwork that has to be provided to the consumer to protect their interests. And so the Real Estate Settlement Procedures Act has a series of documents that handles settlement procedures, the process of closing the transaction or consummation of the transaction, right? And then TILA, the Truth in Lending Act, is a sort of a bigger idea. The idea here is that lenders, it's acting, sort of explaining in a larger way, that lenders need to be truthful in what they're doing. They need to identify and they need to disclose certain things. They need to have clear and conspicuous advertising. They need to deliver what they say. They can't say one thing and deliver another, like bait and switch advertising. So these are all things or attributes or improvements to our system that these laws have provided. They're to some they are, some people I've heard say they're restrictive, but they're not. They're laws, and the laws went into place with the spirit of these to help consumers understand the closing process, which is a confusing process. Many folks may never buy a piece of real estate their entire life, or many people might just buy one, their home, right? And so it's a big transaction for them. It could be a make or break scenario. And if they don't have the proper understanding of disclosure paperwork, then it's a problem. Now, again, whether people read through these disclosures or not, that's a whole other discussion, not for this particular training. Now, if RESPA and TILA got together and they had sort of like this merge or this child, then TRID is sort of this child. Basically, we looked at the system and we said, well, there's a lot of overlap and redundancy between RESPA and TILA, sort of disclosure overload. So what if we created a rule, and this rule basically boiled down to like 2 documents and some timelines so that consumers can understand what we wanted to in the spirit of RESPA and TILA. And so that is what the TRID is. TRID stands for TILA, RESPA, integrated is the I, disclosure rule. So the TILA RESPA integrated disclosure rule. Once again, real estate is the Real Estate Settlement Procedures Act. TILA is the Truth in Lending Act, and then TRID. So the Real Estate Settlement Procedure Act protects consumers from hidden costs at closing. Truth in Lending ensures borrowers understand loan terms and costs. So again, rewatch these when we're done, just so you understand kind of what the higher level easy definition is. These could be things that you do see on exams, so that's something that you want to know. Now, TRID is the TILA RESPA Integrated Disclosure Rule, and it combines RESPA and TILA disclosures into streamlined forms. The 2 big names are the loan estimate, definitely on exams, I'm sure. Now, by the way, I don't have a copy of these exams. I've never seen these exams in terms of what you're going to experience. I just know a lot about the subject, and I've trained lots of people taking this, and I've had a really decent targeting system as to what I know and how I would think about exam questions. And I bring that into an overall experience, and my targeting system's like a pretty good laser focused system. So it helps people, and I teach in a way that utilizes sort of cognitive processing, the way your brain was intended to learn, not the way writers typically write. So, you know, that's how I approach this stuff, just so you understand, like why? How does this dude just know this stuff? Or how does this dude know that this might be on there? And it's just, again, it's me targeting. I don't have the exam, I'm just targeting, okay? Just so you know. So if you hear me say this is going to be on there, I don't have a copy of it saying, here, it's on there. This is going to be on there. Moving forward, and I'll say this till I'm probably blue in the face, and that's hard because I'm sort of brown, is, you know, basically to say, when I say, hey, this is going to be on there, this is my belief, my opinion, okay? Just so you understand. The other document is called the closing disclosure. LECD, okay? LE and CD. So RESPA, breaking it down a little bit further, RESPA has no kickbacks or referral fees. This is something called Section 8. Now, on your exams, there's a couple of sections of RESPA. There's Section 8, there's Section 9, there's Section 10, and then there's Section 6, I believe. And these are the typical sections that you see covered in textbooks or books and materials, whoever's teaching this examination. Now, I don't think you need to know the numbers here. I think you need to know Section 8, however, which is why we threw it in the slide, because Section 8 is probably the most important in terms of sort of the idea of what RESPA is all about. It's to prevent kickbacks or unearned referral fees. So, you know, in other words, if you're a real estate agent and you refer business to a loan officer says, hey, real estate agent, send me your buyers I'll qualify them and I'll get them financing. And the real estate agent says, hey, man, can you pay me a referral fee for every time we close the deal? That'd be great. I'll send you everybody. And the loan officer says, sure, I'll pay you $500 for every single deal you send me. That's a kickback. That's not benefiting the consumer. In other words, going to that lender is really no net benefit to the consumer necessarily. And if it is, and there is a benefit, like there's discounted pricing or something like that, then you can make referrals. And then 2 companies can have a partnership called an affiliated business arrangement. Affiliated business arrangement. Sometimes you'll see it on exams as AFBA, right? And the affiliated business arrangement basically is a formalization of this referral process. So it could be a mortgage company and a real estate firm, and they sort of join forces. And there's very strict rules as to what is an AFBA, so that you're not just creating a shell to legitimize a kickback. Now, think about it like from the regulator standpoint. How is this bad, right? So, okay, in our example, hey, listen, I'd like $500 for every single loan that closes, says the real estate agent to the loan officer, and the loan officer says, sure, I'll pay you $500 for every single loan that we close, no big deal. All right. So the loan costs what the loan costs at the location that's originating the loan, right? So there could be application fees, there could be processing fees, there could be underwriting fees, whatever, junk fees. Anybody that touches a loan, even if you're the most credit worthy on the planet, everybody that touches that loan is getting paid. Yes. And the way that the compensation is paid is basically through these fees. So if we charge a $500 processing fee for every loan that we originate at, our lender, or the company that I work at, let's say it's $500 every time. Well, that $500 is paying for administrative support and staff and all of these other incidentals, right? So that's what it's going towards paying for. But now I got to pay this real estate agent too, and they want $500. And so maybe the loan officer or the loan company decides to increase their processing fee to accommodate or offset some of the cost to pay this referral fee back, right? So like you now apply for a loan and now the processing fee goes up to $900, or that, the processing fee goes up to $650 and another fee goes up a little bit to cover the $500. And so it's not benefiting the consumer. How is it not benefiting? How is it benefiting you? The argument could be made, well, if this person goes to another lender, maybe they can find cheaper processing fees. Maybe they can find a better deal. Maybe they can find lower interest rates. So there's no net benefit, right? No net benefit to doing this referral outside of the two business people getting some extra money. And so what ends up happening many times that the enforcers and regulators have found is that they pass the buck on to the consumer. The consumer ends up paying more money per transaction or is an aggregate of transactions, and there's no actual benefit to this. So RESPA aims in Section 8 to prohibit these kickbacks. They are illegal, and violating RESPA has monetary and possible jail time, believe it or not. And you will see these on potential exam questions when you're practicing. Now, the original document that RESPA required was something called a good faith estimate, and this thing was replaced by the loan estimate according to the TRID rule. This applies generally speaking, and I want you to check your materials as you're studying to all of the types of loans that RESPA applies to. But just as an example here, it applies to 1 to 4 family residential loans. So like large acreage, commercial transactions, investment properties is not subject to RESPA. However, the 1 to 4 family owner-occupied properties are. Okay, so you want to know what's covered under RESPA and what are not. If I were writing a question, I would want you to know that. Now, TILA, from a high level, again, we can go way more granular with all of these laws, but this would take me more like hours versus a few moments that we have today at the exam breakdown. The Truth in Lending Act requires disclosures of, and the big one here is APR, the annual percentage rate. Now, APR is an expression of the interest rate plus all fees and charges known as finance charges associated with doing business with that particular lender. And they express this as a percentage to the consumer. So how does a consumer shop between banks? Which bank do I go to? Do I go to Bank A, Bank B, Bank C? And the way that we compare, if we're looking all 3 banks, I'm in the market for a 30-year mortgage, traditional loan, well, trad loan. I'm looking for a traditional loan, 30 years. And so the way we compare banks A through C is we look at, obviously what's your interest rate? What are your fees? Can you give me a initial APR? So yeah, Bank A says, dude, if you come to us, Bank A, then we're going to charge you, let's just say 6%. Let's say 6.12 APR. The APR can stand alone. Interest rates need further clarification, namely the APR. So if you walk into a bank right now, you might see 6.12% for a 30-year mortgage APR. Okay, that's fine. That might mean the rate is lower than that number, 6.12, but they're expressing to you the rate plus fees and finance charges associated with doing business with that lender. Now, Bank B might offer the same 6% interest rate, and their APR might be 6.373. Bank C might be 6.271. All right, so we're looking at this going, what's the lowest APR, and let's say if all things being equal, they're all the same lender style, they're just some big bank or something like that, I'm not going to name names, but there's some big bank that we all know, may not love, but may just all know. And then we have that scenario. So like in this scenario, bank A is the seemingly best deal for the consumer. It has the lowest APR associated with it. Now you just want to double check a couple of things like, well, what are the total fees, et cetera, et cetera. But when you're looking at the APR, you will be able to look expressively at two numbers and be comparative shopping. That's the way that APR is supposed to work. So that's why it's like the big thing of TILA. So if you can remember one thing about TILA to get you even that much closer to passing, it's all about APR. And then obviously there's other things like trigger terms and right of rescission, blah, 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 blah. There's lots of other stuff, right? But this is just from like a high level understanding. Now it regulates advertising, and it will say when certain terms are stated in an advertisement, it will trigger other terms. So for example, rate, if I advertise the rate, that's a trigger to also identify the APR in our example above. Another attribute of the Truth in Lending Act is the right of rescission. This is for refinance loans. And it gives the consumer 3 days to rescind. A rescission is not like a cancellation. A rescission is going back to square one as if this loan had never been made before. So a rescission is something where we get all of our money back. Everybody goes back to square one. Now, on certain types of refinance loans, many times people are more aware after they've done something. So they close a loan and then they realize now they're market aware, and then they end up realizing that they could have got a better deal. And so we give a sort of a buyer's remorse opportunity for consumers when it comes to the financing world, when it comes to refinancing your home loans. And when we do that, you have 3 days to cancel out of that loan or back out of it. Now, the right of rescission is any day of the week, including Saturday. Sundays and federal holidays are not rescission days. And so I would want you to know what are rescission days, how to calculate a rescission day. Like if a deal closes on a Wednesday, when is it going to fund? So it doesn't fund if it's a refi the day that you write the papers or sign the papers. It funds after the 3rd day of rescission. Now, that's something you definitely want to know. So now TRID, as I sort of, again, from a high level view, is all about 2 major documents. The loan estimate, which is the initial disclosure. This is what it's going to cost consumer if you're going to do business with us. And then the closing disclosure, which is the final numbers, the final disclosure. And these 2 things are working in lock sync, so that you're able to look at certain things and say, okay, here's how that works. This is what it's going to cost me. And then the numbers, the final numbers at the end, this is what it's going to cost. This is what it's going to be like. Covers most closed-ended consumer mortgages. You want to know exactly what TRID covers, by the way. Now, there is a little helpful kind of cheat code here. It's known as the 373 rule timeline. And so this helps with timing, because there's a timing aspect of this stuff on exams. You want to know certain things. And with the TRID rule, you need to know timing. So when I apply for a mortgage loan and I fill out a loan application, in a previous exam breakdown, go back and watch, I talk about the application process. And you learned that Fannie Mae created something called a 1003, which is the loan application form. I also reviewed what are the 6 items that you need to gather to constitute what a loan application is. You don't need to fill out a formal paperwork, a document, the 1003. You can just catch it on the back of a napkin, and you have triggered federal disclosure if you gather these like 6 points of information. Things like name, social, property, a loan amount being sought, etc. So, and I go over those in a video as well. And I actually go over those in the exam, those 25 questions. I believe one of the questions is about the application, and it's pretty helpful to watch that. So loan estimate within 3 business days of the application. So your first 3 is that. Now, the earliest we can close the transaction is 7 business days after the receipt of the LE, which means that the loan estimate has to be good for a minimum of 10 days. So my estimate that I'm giving to you, if I'm the loan originator, This document called the loan estimate has to be good for 10 days. Excuse me while I sip on my green tea. And then we've got the closing disclosure, which must be received 3 business days before the closing date. So thus 3-7-3 rule. Now, sometimes I'll add an extra 3 at the end of this. I'll go 3-7-3-3, and the last 3 could be the right of rescission, which we just looked at before. All right. So this is going to help you with timing. If you can at least work this frame into your studies, you're good. Okay. So timing, you're good with understanding that from this high level. Now, going back into these documents, the loan estimate is an estimated of the loan costs. It must be accurate within tolerance limits. You will go back, I request, and study your tolerance limits. There are some where the fees can't exceed, it have to be exact. There are some that can be greater than no more than 10% cumulatively in a section. And so you want to know what those tolerance limits are. And again, it's good for 10 business days. The closing disclosure, the CD, provides actual final costs. It's delivered at least 3 business days before the closing, and any corrections can require a new 3-day wait period in major changes. So there's something called, that I've gone over this before, called changed circumstances. And you want to go back and review that. Go back in your materials that you're studying from and look at changed circumstances. And you want to look at, if there are changed circumstances, what are the redisclosure requirements? And if there are mistakes that are found post-closing, how long do I have to fix those and issue refunds, if any are required? Now, the closing disclosure and the loan estimate have to be very close between one another in terms of what we did. And if there are any changed circumstances, we need to redisclose. And so you want to know those types of things. Now, remember, if this is going to be 3 days before the transaction, then the loan estimate, if it had to be revised for any reason applicable to federal law with changed circumstances, then it can be given no later than 4 days before the closing, because 3 days before the closing, the CD has to be given to the consumer. You see what I'm saying? So you can't redisclose the loan estimate after the date of the closing disclosure. Now, the closing disclosure has to take priority, and then we go from that timeline. So Sally, in an example, applies on Monday. The loan estimate is due by Thursday, which is the 3 business day rule. Earliest closing 7 business days after the LE's delivery, which would be the following Wednesday. The CD must be given 3 business days before the closing, meaning that Friday before Wednesday's closing. So again, this is a very compressed timeline, and typically you're going to see maybe 30 to 45 days on a typical transaction, depending on market flow and bottlenecking, right? So you're going to see that in terms of delivery, but this is just a very quick, speedy example. All right. Answer in the chat if you're with me. If not, just watch this and you can still answer in the comments. That's great. When must the LE be delivered to the borrower? I'll give you a second. That's pretty easy. And the answer? Boom. Within 3 business days of completed application. Don't forget, study what is an application. There's like 6 points, and you want to remember that it's a 1003. Question number 2. What does TRID stand for? Tick tock, Mr. Wick. And it stands for the TILA, RESPA, Integrated Disclosures. Question number 3. How long does a borrower have to rescind certain loans? And the answer? 3 business days. Double check what rescind or rescission means. The Truth in Lending Act has it. What types of loans can be rescinded? What are the requirements for the notice to cancel forms? What is a rescission day? What is not a rescission day? How do you calculate them? These are all things you want to know. How many copies of the notice to right to cancel does a consumer receive? And if they are improperly given these and the rescission doesn't take place properly, or they aren't given the opportunity to rescind, then how long can we extend the rescission period, which is, by the way, 36 months after the loan closes? Some of the key takeaways, my friends, is know the disclosure timelines, watch for wording traps like LE versus CD, initial versus final disclosures, and focus on RESPA and their kickbacks or anti-kickback provisions. And in terms of TILA, focus on loan terms, APR, and trigger terms like advertising, right of rescission, etc. Now, these are all of those things that you tend to see on this particular topic. All right, so there you go. So, once again, we're coming to the end of our exam breakdown. Today is Wednesday, April 30th, 2025. I've got my days all mixed up. And I'm very, very excited to be seeing so many folks. And if you like the channel and if you haven't subscribed yet, we have a fair amount of folks that do visit us and don't subscribe. Please consider subscribing to the channel. It's not just about exam prep. It's about so much more. We're building so much more opportunity for y'all. Again, my mission isn't to just help you pass an exam. My mission is to make sure that folks understand the relevance of and the magnitude and the opportunity that is real estate, all real estate, finance and acquisitions, investments, everything. It's changed who I am. It's given me so much. And my job is to be sort of a guide, to guide you through and illuminate the various things and to make sure that I'm hearing your success stories. I need to hear the success stories. That's what has to happen. I mean, hearing that people are passing. But if those of you out there are not, don't sit there in silence. Also reach out. Let me try to help. Let me see what we can do. We pour over these comments. We love them. We want to hear them. And if there's anything that I can put together to help y'all out, please don't hesitate to ask. Well, with that being said, again, I just wanted to remind some of you that we do have some cool other items. The YouTube videos are great, but if you're looking for something with a little bit more bite and growl, I would check out those flashcards. They do sell quite a bit, and they are helping people. And remember, you're going to find these flashcards on our site. There are some very popular videos. Don't forget, just as a recap, if you go to our channel, it's at D. Kumar Online, or just search D. Kumar Real Estate on the old search engines. You're going to find a ton of stuff. I would go to videos, go to the most popular, and if you scroll down, the fourth most popular video that's out there right now, it's crushing it, is the vocab. You can buy the vocab flashcards and then follow along with my video. That'll be quick and helpful. And then we've got these top 25 NMLS practice questions, which are lighting up the boards. People are ingesting these, and we have much more to be coming your way. So check it out. Make sure you pick up a copy of the flashcards if you think that they're going to help you out. Again, it's about shaping study strategy, reaching out and figuring out what is essential and trimming off the fat. There's lots of fat on this particular subject, a lot of it. And you don't want to chew on the fat. You want to make sure you're slicing it off and getting to lean stuff that you know is high probability. All right? With that being said, thanks for spending some time with me. I hope it yields you some success. Good luck with your studies and good luck on your tests. We will see you in the next exam breakdown. Have an awesome rest of your week, and we will see you very soon.